This Monday marked the final trading day of June and also the last day of Q2 and the first half of the year. In June, the three major indexes saw strong rebounds and returned to record highs. The S&P 500 rose nearly 5% throughout the month. The tech-heavy Nasdaq jumped over 6%, led by gains in tech stocks. The Dow also posted a monthly gain of more than 4%. For investors, June turned out to be a rewarding month. Looking back at Q2, markets faced a sharp correction triggered by Trump's trade war, but then quickly rebounded. It was a volatile 3 months. The S&P 500 posted its biggest quarterly gain since Q4 2023. Meanwhile, the Nasdaq delivered its best technical performance in 5 years. So overall, the Nasdaq clearly stood out. Now let's review Monday's market performance. Looking at the intraday chart on Monday, all three major indexes showed a similar pattern into the close. They all rallied late in the session. Same with the S&P 500, clear upward move at the close, right? Both Nasdaq and Dow showed the same action late in the day. That end of the day spike was clearly triggered by something. The market responded to a sudden catalyst, and that catalyst was likely Canada scrapping the digital services tax. Did you catch that news? Right after Trump threatened tariffs, Canada quickly responded by canceling the tax. So after Trump's tariff warning, Canada acted fast and officially dropped its digital services tax. What impact did this tax have? Clearly, after the cancellation, markets responded immediately, very positively. So that's a bullish signal. Why is it bullish? Because this tax has long frustrated US tech companies. Canada's digital services tax from the beginning was seen as a burden by US tech giants. It was first introduced by Prime Minister Trudeau during the 2021 federal election, and by June 2024, the law was officially enacted. Under the policy, Canada planned to tax online marketplaces targeted as social platforms and companies using their data. A 3% tax on digital revenue from those services. In short, tech companies had to pay up and retroactively back to 2022. Starting June 30th, 2024, affected firms had to begin payments. The tax applied to companies with over $833 million in global revenue and at least 20 million Canadian dollars in Canadian digital revenue. That means Amazon, Apple, Google, and even metaverse platforms would all be affected. Since most of the targeted companies are US tech giants, the proposal drew heavy criticism from Washington. The US tech sector would take the hit. The companies affected were mainly US digital service providers, so the tax sparked a backlash, especially among large US tech firms. After the law passed, it triggered major opposition in the US. Both governments have gone through multiple rounds of negotiations. Back during Biden's presidency, the US and Canada were already clashing over this tax. Disagreements continued for years, and since Trump's return to the office, US-Canada relations have soured even more, mainly due to trade friction and Trump's repeated threats to absorb Canada. That rhetoric dragged bilateral ties to a new low. Analysts say that from the start, the US viewed Canada's digital tax as a direct threat to American tech giants. It was seen as hostile because ultimately it jeopardized the business interests of the US tech leaders. In fact, some European countries started imposing digital services taxes years ago. And ever since Trump returned to the White House and began aggressively using tariffs against trade partners, regulating US tech firms more strictly has been one of the EU's planned countermeasures. So Canada's cancellation of the digital services tax is actually a positive signal for the market. It's considered bullish, which is why the market reacted positively, because big tech companies no longer have to face actual taxes. And it also shows something important. Canada is serious about negotiating on tariff issues, so this move is seen as a market-friendly signal, which explains the positive reaction. Now let's talk about what might happen Tuesday. Will the rally continue? After all, the major indexes recently have been performing well, especially the Nasdaq. The S&P 500 even hit a record high. That optimism is still going strong. The market remains on an upward path. So on Tuesday, can the market keep this momentum? That's a key concern now. After such a strong rally recently, people are wondering how much further it can go. Is there a chance for a short-term pullback? From a technical standpoint, let's look at the S&P 500. The S&P right now, especially on the technical side, has clearly improved. The MACD indicator here shows a bullish crossover above the zero line. This means bullish momentum is dominant. It's in control. So the earlier signs of weakness are now showing signs of recovery. So for now, we can still treat this as a bullish trend. It can likely sustain its upward move. Even if it doesn't hit a new high right away, a short-term pullback might occur. But if that happens, it could actually offer a better entry point. So a pullback isn't a bad thing because there's solid support below. The previous resistance zone has now turned into a support level, so any pullback would likely hold there. If a pullback happens soon, it could send a very positive signal to the market. It doesn't mean the trend is reversing, rather, it's just a temporary breather to allow more investors to get in. So the dip could be seen as a healthy signal, not a bearish reversal. The pullback doesn't mean the trend is ending. If anything, it may invite more buying. Fresh capital might enter at this point. So whether the index keeps climbing or pauses for a correction, either case can lead to a short squeeze. If it takes a break first, consolidates and pulls back, that still gives us a nice entry. So technically speaking, both scenarios are positive in the short term. The overall technical setup remains bullish. Now looking at the KDJ indicator, although right now the K line has entered overbought territory, right? There's potential for short-term pullback, but at the same time, it shows strong bullish sentiment. Momentum remains very strong, so any dip here could actually be a good entry point. Technically speaking, the index is in a very healthy state. Now let's take a look. Tech stocks are still our focus on Tuesday, and within tech, we saw something unusual Monday. Apple showed some notable moves. On Monday, Apple stood out with a strong move. Let's take a look at this chart. As you can see, Apple had a clear breakout on Monday. It surged on higher volume, and that volume was quite visible. Compared to earlier, volume has been steadily increasing. It's showing a gradual rise. That kind of volume trend is healthy. The volume price pattern looks solid, especially now we see a breakout. The surge was accompanied by increased volume. That's key here. The breakout is real. The moving averages have all converged. No matter which time frame you choose, the MAs are tightly packed here. They're tangled together. This kind of convergence usually signals a potential breakout, so the question is, will it break up or down? Judging from the current momentum, the odds favor an upward breakout. That's what it looks like for now, right? Because it just broke above its recent consolidation zone. Looking at the short time frame, the 1-hour chart clearly shows it. It has been consolidating here for a while, then it chose to break out upward. The MACD also formed a strong bullish crossover above the zero line. That's a powerful bullish signal. Same goes for the KDJ indicator. The K line crossed above the D line. A golden cross formed there too. All of this means multiple indicators are aligned bullishly, so momentum is clearly upward. This breakout is likely to continue, especially with volume backing it up. The breakout came with decent trading volume. From a technical perspective, this upward signal is very encouraging. On the daily chart, MACD also shows bullish momentum, starting to dominate again. Buy-side momentum is gradually expanding. Now let's look at the higher time frames. On the weekly chart, Apple's bullish trend is even more obvious. It has steadily followed an upward trend line. That trend line has been intact this whole time, right? Looking at Apple's weekly chart, it's maintained support along that trend line. Each pullback to that trend line has been a solid entry point. Every time it hits that line, it bounces. And right now, the price is near that trend line again. This is key. Now take a look at MACD. The bearish momentum has been weakening. You can see it's fading gradually. Bit by bit, bearish strength is shrinking, and now it's hitting a bottom. A bullish crossover is likely coming, so that's a very clear signal. At this point, we can consider taking a position. Yes, this is a setup worth trading, definitely worth considering. Look at the weekly chart. On the weekly time frame, what do we see? A clear bottom pattern has formed. These three candles form a classic bottom reversal pattern. The middle candle has the lowest low compared to the candles on either side, and its high is also lower than both of its neighbors. That's a sign of bottoming. A potential bottom reversal is setting up, especially here. This weekly candle shows a noticeable uptick in volume. Volume confirms the move. So at these lower levels, price is once again testing trendline support. All of this clearly points to a great opportunity, both short and long term. There is strong alignment across time frames, and when time frames align, that's powerful. Short term and long term signals are in sync. That gives the move extra strength. So the probability of a move up is much higher now. That's why at this point, we're seeing a strong bullish signal, a clear sign to consider buying here. Going long on Apple in this zone could be a solid opportunity. Alright, that's our brief analysis of the market. Just a simple interpretation for your reference. If you have any questions, feel free to leave a comment below.